I'm Scott Starratt with Starratt Wealth Management at Canaccord Genuity Wealth Management. So today I thought I would touch base and chat a little bit about what's going on in the markets, as well as what's going on in a lot of client portfolios. But first, there's a small change within the Starratt team. Kim, who's been with us now for a few months since moving to Canaccord Genuity, she's going to be leaving and going to spend more time with her family in Kelowna. She realized that family is very important to her and that that's a great place to live. So we wish her very well as she goes. And replacing her is going to be Han Yi. Han Yi's spent a lot of time at CIBC and CIBC Wood Gundy. And so her background is she was actually an accountant for a few years. So we're hoping she'll bring some of her accounting knowledge and attention to detail to the job, and we're really looking forward to her working with us. And if you have a chance to reach out to her to say hi, feel free. Angela, of course, is still here, and Jim. So we're still all intact. It's just we're doing a one-for-one swap right now. So as far as the markets go, I want to take a look at my cheat sheet here because there's a really interesting thing going on that some people would compare it to 2000. I don't know if you really should, but there's been 5 stocks in the U.S. that are up 35% year to date, and that's Facebook, Amazon, Apple, Microsoft, and Google. So as of the end of July, if you were to combine all those performances together, they'd be up 35%. The other 495 stocks in the S&P 500 are down 5% this year. And in Canada, it's similar, that there's a small number of companies that are moving up, and the vast majority of the companies, whether you call them small, mid-cap, the top 495 companies in the US are still pretty big companies. But if you look at those, you'll see that there's quite a disparity between these, what we call mega caps, these really large companies moving higher, and the ones that aren't mega caps, which again are still very, very large companies. So I'm not saying that ends anytime soon, but we continue to believe that there really isn't the risk reward in investing in the stock market in a big way right now. Now, as you know, most people do have exposure to stocks. I think in client portfolios, we're between 20 and 30% exposed to stocks right now. And so really we're focused on trying to make sure that the risk reward is better balanced. The reality is, we just don't know what's going to happen with COVID, with what's going to happen with the economy. You've heard me chat before when we did our last Zoom reviews or phone reviews that there's an economic recession that is now starting to come back, and then there's a health pandemic, which we would liken to a natural disaster. And that's still undecided what's going to happen with that. From some of the news articles I've been reading, basically, even if there's a vaccine that comes out, now Trump says, I think yesterday that he feels that there should be one that'll be out before the election. But let's go with the experts down there, and they say by the end of the year. The reality is that it will take some time for people to actually have the shot. The second thing is a lot of the ones that are now in kind of final stages, phase 3 or phase 2B research or clinical tests, I should say, they're actually 2-shot variations, meaning that you need 2 injections in order for you to be immune. So how fast can that happen? Your guess is as good as mine, but I think this is the whole pandemic and the whole health issue is probably well into 2021 before we have any sort of stability, and that's if there's a vaccine that comes out. So I just can't see where there's a great reward for taking a risk in markets right now, is essentially what I'm saying. The other things that have happened in the last little bit, gold has gone on a tear, has really increased. We hit an all-time high here in the last couple of days. Now more and more people talking about gold 2,500, gold 3,000. I remember, not that long ago, it was gold 5,000. And so there's 2 real big factors that have, really driven gold higher. The first thing is the US dollar. Now gold and for that matter, most commodities are priced in US dollars. So the US dollar has decreased relative to most of the other world currencies by a fair amount, anywhere between, depending on the day, 8 and 10%, which is a pretty fair amount. What that means is that the value of gold will go up because, again, it's priced in US dollars. So if the US dollar drops, the price of gold will go up. So that's definitely one factor. The other factor is interest rates are zero, or essentially zero. The Federal Reserve, down in the States, which is the US Central Bank, as well as the Bank of Canada, the European Bank, the Bank of Japan, all of them have said that they don't expect interest rates to go any higher for years. I mean, we aren't talking weeks, we aren't talking months, we're talking years for them to go higher. So what some people are saying is, well, if I'm getting paid zero essentially in a government bond, right now a 10-year US government bond is trading at about 0.6% per year for 10 years. But if I'm getting zero in a government bond, why would I participate in that when I have some currency risk, i.e. the US dollar, dropping? And so gold becomes more attractive because the big knock on gold for years has always been, well, it doesn't make you any money. Well, if, 10-year bonds are 0.6 and there's well over a third of the world's debt is negative interest rates, it's actually costing you money to buy a bond, then gold looks like a much better alternative. So who knows where it's going to go from here? I mean, we are exposed to gold in the portfolios. We do have physical gold. Of course, we bought that new gold bond, gold note, not that long ago. That was paying a really nice interest rate. I think it was 9.95%, which is wonderful. And so we're in a situation now where I think not only do you have some gold in the portfolios due to that, but you also have gold in the portfolios through some of the stock holdings that some of our managers are using right now. The other thing I want to talk about was, the election down the States, definitely a big risk coming up. The debate's still out there whether a Trump presidency, a Trump re-election is going to be positive for the market, and if Biden gets in, whether it be negative or not. I'm not going to guess on what the case is there. But the reality is that uncertainty, if there's a very close election that goes like 2000 to the Supreme Court, then you really have some uncertainty. Markets hate uncertainty. So I think going into the fall, not only do you have the economy, which still has not recovered, not only do you have health issues, which, like I had said earlier, I don't think really get solved or dealt with it well into 2021, but you have an election on top of it. Again, just layering on the idea here that, that there's a fair amount of risk in the market. And by not taking a bunch of risk right now, I think client portfolios will definitely benefit from that in the long term. The other thing that I want to just briefly touch on were a few of the investments in the portfolios. A lot of you have the same investments. Really, we're looking here at keeping things safe. So we have our structured notes, these bank bonds, as we refer to them as. They're all operating as they should. There's a few that are still down in value because of the uncertainty out there, as well as the volatility in the market. We expect all of those to fully recover by the time the maturity date has come on those. The earliest maturity date, I think, is 2024. So there's still lots of time for them. The other ones in the portfolio that have done quite well is our private debt piece that continues to perform as it should. And then we have all the other bond investments in the portfolio performing exactly how they should. So no big nasty surprises, no big huge positive surprises, and no big negative surprises. The market investments, again, these are investments where you benefit from the stock market going up and you get hurt when the stock market goes down. Most of those, especially if they're investing in bigger companies, they've all fully recovered. A few of them that are investing in small or mid-cap companies still have a little bit of a ways to go, but they're definitely way up from where they were back in March of 2020. There's one area that surprised us a fair amount, and that's the defense bucket. One of the investments there, HGC, they actually had a performing investment where they actually performed quite well in through the downturn. They didn't lose much money at all. I think in March, the worst that they were down was 4.8%. Fully recovered that in the next couple of months. But they had a monster month in last month. They were up 9.1% in July. Pardon me, in June. And a lot of that has to do with the fact that just their strategy was working. It wasn't that they took more risk, or it wasn't that they changed their strategy. But what it's meant is that their annual return has turned to double digits now. And so although we never want necessarily to see that, you know, on a consistent basis, because if it happens over and over again, it means that they're taking too much risk. What we do like is that from time to time there could be these positive surprises, and you know, it's always nice to have a positive surprise as long as the manager and as long as the fund has not taken any additional risk to get that positive surprise. Overall, like I said, just more status quo. We continue to think the markets are you know, going to continue to be volatile. We continue to believe that interest rates are going to be low. And so the balance is, how do you find good investments that are paying reasonable interest rates without taking a lot of risk? And that's what myself and the team are really focused on over the last little while. If you do have any questions, or you know, you have any questions or any comments, please don't be afraid to reach out. We're available email, phone, all the usual channels. So please give one of us a shout if you have any questions at all. Thank you.